Lloyds' takeover of ailing banking giant HBOS in the teeth of the financial crisis almost unraveled within days and felt like two ocean liners about to collide, the former chair of Lloyds has told the High Court. Sir Victor Blank was giving evidence in an ongoing case brought by close to 6,000 shareholders suing Lloyds and key ex-bosses for more than £600 million in compensation as they argue they were misled about HBOS's dire financial situation. It was standing room only as Sir Victor was grilled in court, with many aggrieved shareholders attending, as well as TV presenter Noel Edmonds, who is pursuing the lender in a separate £300 million case related to the collapse of an entertainment company. Lloyds and the ex-directors deny the claims and say they are flawed at every level. Under cross-examination, Sir Victor recalled calling on the help of then Prime Minister Gordon Brown on a number of occasions to smooth the passage of the HBOS deal, including at a cocktail party in the city in early September 2008 when he was assured by Mr. Brown the government would do all it could to help. "If the PM says he's going to support it, I assumed he'd get it through the hoops," Sir Victor said. Less than a fortnight after striking the HBOS deal, Sir Victor said he was told HBOS might not be able to open its branches on Monday, September 29 after being denied access to central bank funds. "I remember it well. I walked around the garden 3 times thinking, what the heck can I do? It was like two ocean liners about to collide," he told the court. He then phoned Mr. Brown to tell him it looked like a catastrophe was coming. The Prime Minister said he would call the Bank of England or the financial regulator. The government led a recapitalisation of major banks 2 weeks later and HBOS regained access to bank funds. Sir Victor and Mr. Brown also discussed the potential tie-up twice in July that year, including on a flight back from a business delegation trip to Israel and Palestine in July 2008. Sir Victor was pressed on why Lloyds agreed to pay a substantial premium over HBOS's collapsed share price to buy its rival, saying it was very easy with hindsight to say it could have got a better deal. But he added, "You don't screw the other guy to the ground." He said the Lloyds board was one of the best boards there was and we considered at the time the deal was in the best interests of shareholders. When asked why the board did not disclose HBOS's use of emergency bank funding ahead of a shareholder vote on the deal, Sir Victor said he did not believe it was material. "The market knew it was taking money from the UK and US governments," he said. "The fact that it needed a little bit more is not material." Sir Victor said he accepted the bank's reasoning at the time for keeping the emergency funding secret, which was because of the stigma attached and the risk of a run on HBOS. Speaking outside the court, Mr. Edmonds said he hoped the case would be a forerunner for the first criminal proceedings against key people at the top of banking from this period of history. Lloyds denies it caused his entertainment company to collapse in the separate case.